This video is your March 2023 Florida housing market update. I am going to start at a macro level. We will cover the entire state of Florida. We're going to drill down. We're going to get into the hyperlocal markets. We're going to compare and contrast what has happened in the different metros that exist within the state of Florida. I've seen all kinds of content out there talking about the next market to crash, the next metro to crash. And while I do believe that at some point the pain of recession will cause forced sales, will cause distressed sales, as of today, I want to know what the temperature of the market is so that you've got the best information to make the best decisions for yourself, for your family, and for your financial bottom line. And stick around until the end, because as a boots on the ground operator of a high performance real estate team, I can tell you what's happening right now in March. The data that I'm sharing is old news. It's February information. It's the February housing market data, and we're in March. So February is no bueno. It's useless. It's last month. What is happening today? We're going to cover that in great detail, but we're going to start at the state level. And if you're thinking about transacting business, buying or selling in any one of these metros, please reach out, because we will connect you with an all-star professional, someone that we know, like, and trust, that can serve and support you at the highest level, irrespective of market conditions. And yes, banks are failing. And yes, mortgage rates are going higher. But what's happening right now in the market is what we must know. So let's get into it. And what you can see is the monthly market detail for February 2023 for single family homes in Florida. And to be clear, this is only single family homes. This does not include any other property type. Closed sales, February 2023, down 21.3%. Those sales that were paid in cash, meaning there was no mortgage, down 27%. Median sales price up 3.5%. 3.5%. I have been calling for single digit appreciation as we continue into 2023, but I also know the markets that exist within the state of Florida will trade very differently. So it will be interesting to see what happens as we go into South Palm Beach County, as we go into Boca Raton, Delray Beach, Boynton Beach, and more importantly, we look to see what's happening in the month of March, the month that we're in, because this is February data, and February data is no bueno if you want to know what's happening in March. And I'll tell you right now, I was blown away, because we see single digit growth here. That's not what we see in March. So let's get into it right now. Average sales price up almost 2%. Again, this is the state of Florida. Dollar volume is down 20%, which stands to reason given that the closed sales were down 21% in the state. Median percent of original list price. Now, if you've been watching for a while, you know I've been talking about this, and these trends are consistent. We're not seeing 100% most markets these days. And you can see in the state of Florida, it was 95.3%. That could be a function of overpriced listings. It could be a function of buyers negotiating better deals. Nonetheless, it's down almost 5%. Median time to contract is up 258.3%. It was 12 days in February 2022, and it's 43 days now, or at least as of February 2023. That is a big jump. It's also a return to normal. 43 days to go under contract is what a normal market looks like, but it's also factually true. If you price your home the right way, it doesn't take 43 days to go under contract. In fact, recently I sold a home which had the strictest timelines to go under contract because they had purchased a home contingent upon sale. Now, at the time of us writing the contract to purchase their dream home, they hadn't even listed their home yet. And I can tell you that no seller ever accepts that type of contingency. Normally, a seller will insist that if there is a home sale contingency, that the contract on their home, which is in question, that must be sold, it's already under contract. It's already past the contingencies within the purchase contract, and it's essentially as good as sold. But getting a purchase contract accepted when the home in question isn't even listed yet almost never happens, which is why it is critical to work with a professional who can advocate on your behalf the right way. Because despite this being a almost 0% chance of being accepted, I got it done because I am an expert at creating rapport and a high level of trust with the other party. So despite this being a very challenging circumstance, we were able to get it done. But I share this because we had very tight timelines on when the home in question must be under contract by. And I had 7 days. 7 freaking days. Most agents would never take that deal. They would be terrified of it. But I knew for certain that we would price it and market it the right way. And I knew we would find the one buyer on planet Earth willing to pay more than anybody else in less than that timeline. And so a big shout out to Chris and Nicole Danner because they trusted me in this process. We got them a full price offer in 4 days. Home closed. They bought the new home. Everybody's happy. And we can help you too. So if you're thinking about buying or selling, please reach out directly and we'll get started right away. But median time to contract in the state of Florida, 43 days, which is an uptick of 258%. Time to sale up 59% from 54 days to 86 days. Not uncommon. That's typically what the sales cycle looks like in a more balanced market. New pending sales down almost 12%. New listings down almost 13%. Pending inventory down almost 21%. And the inventory of homes for sale, the active listing, the homes that are on the market, which are your competition if you're thinking about selling, that number is up 131%. That's a big number. That's a big shift. And if you're thinking about buying, that means you've got way more leverage to negotiate the deal of a lifetime. Unless, of course, the economy implodes. Unless, of course, the housing market crashes. But so far, at least in February, we don't see any evidence of that. I wonder what March will show us. And I'm telling you right now, please stick around because you're going to be blown away. Which brings us to month's supply of inventory, which is a massive uptick in the state of Florida from under a month to almost 3. 200% increase in months supply of inventory. Now, if you've been watching for a while, you know that I've talked about the fact that 2.7 months is still a seller's market, and the sellers are sitting on a ton of equity. So unless they are highly motivated and must sell, there's a lot of folks out there that think they are playing the lottery. They don't realize that the housing market is always right. And right now, buyers have significantly way more leverage than they've had in a long time. And I suspect months' supply of inventory is going to continue to uptick as we get into the pain of recession, as we get into 2023, as we get into 2024, and certainly as we get into 2025. And I'll link a video to the warning for the 2024 housing market because I can't unsee what I've already seen and I can't unring the bell, but the writing is on the wall in many markets. So I want you to check out that video. It'll be linked above. Closed sales. Well, we've covered this already, but to give you some perspective as far as the last year, February closed sales are down 21.3%, which isn't as bad as the 32 or the 36 or the 38% decrease in the most recent quarter. But what's obvious is that closed sales have fallen off a cliff in the state of Florida over the last year. Cash sales down 27.2%, and you can look back in the previous year. Big decrease in cash sales. 27, negative 35, negative 38, negative 39, negative 28, depreciating, slowing, less cash sales. All the way down to May 2022, where there was an uptick of almost 5%, March 2022 of 10%, and February 2022, an uptick of 15.4%. Which takes us to cash sales as a percentage of closed sales. And as you can see in February 2023, the percentage of closed sales paid in cash was 31.3%, which is a decrease of 7.4% year over year. But you can go down the chart and see all the way back into February 2022, where it's -4.8, -3.9, -1.6, -5, -1.3, -1.3, and then upticks from July 2022 all the way back to February 2022. Which takes us to median sales price in the state of Florida. Now, I have mentioned in the past that I don't particularly care for the median number. The median number is the middle data point in a range of values. However, my opinion is not the economist's opinion. According to the economist's note, median sales price is their preferred summary statistic for price activity because, unlike average sales price, median sales price is not sensitive to high sales prices for small numbers of homes that may be characteristic of the market area. Well, yeah, I agree with that too, which is why it's critical to understand the actual market that you're shopping in. Because right now we're talking at a big macro number level, and that's not particularly instructive when you're shopping in a hyperlocal market. So it is critical you work with somebody that understands what the housing market dynamics are so they can advocate and negotiate for you the right way. But we'll stick with median sales price for now. Single digit growth, 3.5%. And you can see this is the lowest number in a long time. January, 4%. December 2022, 5.6. November 2022, 9.6. 12, 13, 15, 16, 19, 22, 22, 21, and 21% change year over year. Have we gone negative yet? No. Is it coming? Let's wait and see what March numbers tell us, because we're looking at February here and we're looking at the state of Florida. But what's happening in the hyperlocal market? We are going to cover that. So please stick around. This is critical information for you to understand. Now, if you find this content valuable, please subscribe to the channel, give it a thumbs up, share it with a friend, and let's keep going. Average sales price. All right. This is the number I find to be a little bit more instructive. And clearly the economists don't agree with me here, but I'm not an economist. I'm a boots on the ground operator of a high performance real estate team. I must know what's happening in the hyperlocal market, but average sales price now in the state of Florida is an increase of 1.8%. January 2023, increase of 5.2%. I have said all along that I don't like the median sales price. Now, I prefer average sales price because it tends to show a more realistic snapshot of what's actually happening as far as percentage changes year over year are concerned. But truthfully, both of these stats are completely meaningless until you drill down into the hyperlocal market that you're shopping in. It's still instructive. You must know what's going on at a macro level too. But when you're serious about buying or selling, you must know what that hyperlocal data is. And I'm committed to telling you the truth, no matter what's happening in the market. So come hell or high water, I'm going to tell you the truth so that you can make the best decisions for yourself, for your family, and for your financial bottom line. But what you can see, average sales price, February, 1.8% appreciation. January 2023, 5.2% appreciation. December is the only outlier on the last year, down 4%. And then you can see it's all over the place, but lots of double-digit appreciation in the state of Florida. And please know that the hyperlocal markets that exist within the state are going to trade differently. You're going to see the 20% plus appreciation in many markets, at least as of February. And I can't wait to show you March, because if you haven't figured it out by now, it's not positive. And it's double-digit depreciation. Which brings us to dollar volume in the state of Florida. And of course, this number is going to be down across the board primarily because closed sales have fallen off a cliff. And so the dollar volume is going to fall accordingly. But as you can see, in February of 2023, the percent change year over year of dollar volume of sales in the state is down almost 20%. And you can also see what the rest of the year looked like month over month, which takes us to median percent of original list price received. And gone are the days of 100% across the board. But you can see from July to February, it was 100% of original list price. And then the market changed, and then the market shifted. And what you can see right now is 95.3% and still in the high 90s, but it's not 100% anymore, which again could be a function of overpriced listings. But I suspect it's far more likely that buyers have much more leverage and are negotiating much better deals, because that's certainly been my experience. In fact, in my hyperlocal market, on a home that was overpriced, we were able to negotiate a significant discount and walk into $10,000+ worth of instant equity for my buyers. And to be clear, equity is not real until it's realized. But walking into $10,000+ is certainly better than a swift kick to the teeth, which is what the sellers got relative to their original list price. Which takes us to median time to contract, which again is up 258%. But you can see over the last year, it's been massive increase after massive increase as far as median time to contract. But to be clear, 12 days, 9 days, 8 days, 10 days, 22 days are not a function of a normal, healthy, balanced market. That was a extreme seller's market. And while, yes, you can create a market within a market to find the one buyer on planet Earth that's willing to pay more than anybody else, most folks don't know how to do that. So we've returned back to a normal median time to contract, which is roughly around 43 days. But the trend is no bueno if you're thinking about selling, and it's muy bueno if you're thinking about buying, which takes us to time to sale, which is up 59.3%. And I'm not going to go into this. You can see it yourself. You can see a massive increase in median time to sale going back to about June, which was the last downtick percentage change year over year. New pending sales down 11.6%. And you can see back in December, massive decrease, down 31%, down 36%, down 41%. But we're down 11.6% right now. You can see the last year that new pending sales have fallen off a cliff while mortgage interest rates have skyrocketed. And I suspect they're going to continue to do so until we get into May's housing data. Because in May, I suspect that inflation and housing will start to cooperate, and that's when we'll start to see mortgage interest rates begin to drop. Unless, of course, all the banks fail and there's a liquidity crisis, in which case the housing market is going to go to hell in a handbasket, along with every other market too. New listings in the state of Florida down 12.6%. I'm going to round that up to 13%. And you can look back over the last year and see the decrease or the increase year over year. Which takes us to active listings. And this is critical to understand if you're thinking about buying, because right now you've got way more inventory sitting on the market, which means you've got significant leverage to negotiate a better deal. You've got more choices, which is exactly what you want if you're thinking about buying. If you're thinking about selling, no bueno. If you're thinking about selling, now is the time, because I suspect as the pain of recession worsens, as the economic conditions deteriorate, and trust in the system erodes, I suspect there's going to be lots of people sitting on lots of what they believe to be equity, looking to cash out. And they're going to be in for a rude awakening if everyone comes to the same conclusion at the same time, because that equity is not real until it's realized. And if there's significantly more supply than demand, well, guess what? Home prices drop fast and that equity disappears. And the truth is, what you have in equity today is not going to be what you have in equity tomorrow or the next day, 90 days, 120 days, a year, 2 years, 5 years down the road. That number is always changing. But here's the good news. If you don't have to sell, it doesn't really matter, because the long-term trend is your friend. And over time, supply and demand will do its thing and market forces will do what they do. And the fact is, in many markets, especially mine, there is a shortage of housing. And so a normal, balanced, healthy market will eventually win the day and home values will continue to appreciate over time. But I suspect the near term is no bueno. So if you cannot ride that out, If you're living on the edge of what you can financially afford and you're praying that interest rates are going to go down near term so you can refinance, you probably should wait, depending on the market that you're shopping in and what your financial condition is. Because I know there are markets that are more insulated than others, but right now we're talking about the state of Florida. We're going to drill down, and this is going to become very useful information in the hyperlocal market soon. So let's get through this. Month supply of inventory. Massive jump, up 200%, 2.7 months in February of 2023. But you can see the uptick, 180% change, 170% change, 133% change. You can read, I'm not going to insult your intelligence. You can see there's a massive increase in supply of homes for sale. But if we look back over the last year, you can see in February 2022, there was less than a month's supply of homes for sale, which is an extreme seller's market. Right now, we're at 2.7 months in the state of Florida, which is still a seller's market. What will the future hold? Yet to be determined. I don't know, although I suspect I do know. It hasn't happened yet. Right now, we're sitting on 2.7 months of inventory, which is a seller's market. Up until it's not, but let's keep going. Closed sales by sales price. This is important information to understand in the state of Florida. And you can see on the chart over here in blue, the price point breakouts, right? But all of them are down year over year. 400 to just under 600 is down 18%. 600 to just under a million is down 15.4%. And a million or more is down 17.3% change year over year. So no shocker that closed sales are down significantly. This is just a breakdown by price point, followed by median time to contract by sales price. And you can see there's been a massive uptick pretty much across the board in terms of time to contract by sales price. But again, it's broken down by price brackets. And what you can see, 300 to 400 is up 380% to 48 days. 400 to just under 600, up 309%. 600 to just under a million, up 192%. And a million or more, up 96%. It takes longer to go under contract unless you price your home the right way. And again, we're talking about the macro picture. This is the state of Florida. Let's look at new listings by initial listing price. And what you can see is the tale of two different markets. And from 0 to 600,000, there's a decreased percent change year over year. But 600 to just under a million is up 2%, and a million or more is up almost 10%. There are much more new luxury homes for sale than other price points. There's a bigger supply of luxury homes for sale in February, which means there's a lot more competition if you're thinking about selling a home over $600,000. Those folks are looking to tap into some equity and move on to their next adventure. And right now it's still manageable, but as the pain of recession gets worse, I suspect there's going to be a lot of disappointed homeowners because the equity went poof, bye-bye. Yet to be determined, I don't know, but I'm committed to telling you the truth as to what's happening in real time. Inventory by current listing price. Every one of these price points has increased exponentially, with the exception of anything under 50,000, which dropped 24%. So less inventory for sale in the 50,000 or less. And frankly, I don't know of a single family home that isn't a mobile home under 50,000. But to be clear, we're talking about the state of Florida. We're not talking about the hyperlocal markets that I serve. But what you can see is a massive uptick in basically every price point, with the exception of those under 50,000, of pretty much double-digit growth and triple-digit growth across the board as far as inventory is concerned. But 600 to just under a million, an increase of listings for sale, inventory by listing price of 156%. A million or more is up 116%. No bueno if you're thinking about selling, and muy bueno if you're thinking about buying, because you've got the leverage. Which takes us to the most important thing that everybody wants to know about, besides what's happening in March, which of course is distressed inventory. Those homes that are bank owned or short sales, foreclosure properties. What does that market look like? And again, we're talking about the state of Florida, but what you can see, The foreclosures, the REOs, the bank owned, is up 12.5% in February, jumped from 96 to 108, which relative to the last bust is nothing. 108 foreclosures in the state of Florida is not a big number, but a 12% increase or 12.5%, shoot, let's round it up, 13% increase is noteworthy. And I suspect that number will continue to trend higher as we get into the pain, the real pain of the recession, because the soft landing, my friends, is over. But short sales are down 70%, a massive decrease in short sales, 57 in 2022 and 17 in February 2023. Again, we are early for distressed sales, and I don't expect this number to really uptick for at least a year. But I'm committed to telling you the truth, irrespective of market conditions, so that you can make the best decision for yourself, for your family, and for your financial bottom line. Now, this is the state of Florida, which is important to understand before you start shopping in a hyper-local market. But what do the hyper-local markets look like? And I have to be careful when I say hyper-local market, because what I'm about to compare is not hyper-local. It's the metro comparison. But it is very important information because every metro trades differently. And right now, there are lots of content creators out there and lots of headline news that are talking about the cities that are most likely to bust in Florida. Well, let's look and see what they actually did in February 2023 and see if we can debunk some of the perception out there, because I suspect that many of the metros that are in danger or at risk, that might not actually be the case. And what you can see is closed sales and median sales price statewide by metro. And I'm just going to go straight down the list. We've got the Cape Coral Fort Myers metro year over year median sales price uptick of 9.1%, almost double digit growth. We've got Crestview, Fort Walton Beach, and Destin up 2.5%. We've got Deltona, Daytona Beach, and Ormond Beach metro up 3%. We've got Gainesville up 6.5%. We've got Citrus County, Homasa Springs metro up 1.9%. Jacksonville, 2.5%. Lakeland, Winter Haven, up 1.5%. Miami, Fort Lauderdale, West Palm Beach metro, up 4.2%. Naples, Immokalee, Marco Island, up 10.7%. Ocala, up 3.9%. Orlando, Kissimmee, Sanford, up 5.3%. Panama City, up 6.1%. I was just in the country of Panama, and I'm going to talk about the affordable housing options that exist there in an upcoming video. So please subscribe to the channel. You don't want to miss that. I was shocked how affordable it is to live in Panama and how incredibly nice it is to live there too. And as you might have already guessed, my Spanish speaking skills are limited to bueno and no bueno, but I got along just fine, and I suspect you will too. Pensacola, Ferry Pass, Brent Metro, up 0.7%. Port St. Lucie, up 5%. Punta Gorda, down 4.8%. Sebastian Vero Beach, up 0.3%. Sebring, up 5.9%. Tallahassee, up 0.3%. Tampa, St. Pete, Clearwater Metro, up 3.1%. And the Villages, where they get freaky, down 8.8%. For the most part, what you can see here, and again, this isn't scientific, I haven't actually done the math, but what you'll see across the state in each of these metros is single-digit growth year over year in February. There are outliers, and truthfully, the markets within these markets are going to trade differently, which is why it's critical to understand exactly what the hyperlocal market data is before you think about buying or selling. And again, as I promised, March data is coming because February data is a month old, and we want to know what's happening now so that you can make the best decisions. Which takes us to the monthly market detail for February 2023 in the Miami, Fort Lauderdale, West Palm Beach metro. And I can tell you, as a boots on the ground operator of a high performance real estate team, these numbers are radically skewed relative to most hyperlocal markets because Palm Beach, Broward, and Miami-Dade trade very differently. Yet it's still important to understand what the temperature of the market is. So let's get into that right now. Closed sales down 26.4%. Cash sales down 26.5%. Median sales price 4.2% appreciation, which tells a radically different story than the average sales price, which is down 3.4% in this metro. Dollar volume is down significantly, but it trades in parity with the closed sales, which have fallen off a cliff. So there's less dollar volume. It's down almost 29%. Median percent of original list price received is down 5.5%. Time to contract, 42 days, up 147%. Time to sale, up 32.8%, 81 days. Pending sales, down almost 13%. New listings, down almost 19%. Pending inventory, down almost 23%. Active listings on the market, up 92.3%, which is great news if you're thinking about buying. It's no bueno if you're thinking about selling. And the month supply of inventory jumped 154%, 3.3 months. Again, still a seller's market, but a massive uptick from the 1.3 months supply of inventory in February 2022. Now let's look at what the distressed inventory looks like in this metro, because everybody wants to know, is distressed sales going to bring down the housing market? And as of today, there's no evidence of that. Foreclosure sales were down 20% in this metro for February 2023, and short sales were down 83.3%. There is no distressed inventory, or there's very little distressed inventory in this metro area, at least for now. But again, we're talking about February, we're in March. What will the March numbers yield? And we're going to get into that very soon. But I can't show it to you until we cover Delray Beach. So Delray Beach, again, my market, my wheelhouse. Closed sales down 21%. Median sales price down 6.3%. Average sales price up 68.5%. That is a very interesting stat in Delray Beach. Dollar volume's up 32%. Well, closed sales are down 21%. But if the resale market is gone through the roof to the tune of 68%, it's going to increase the dollar volume to the tune of 32.5%. Original list price received is down 6.1%, 92.6%. Time to contract, 51 days, up 34.2%. Pending sales, up 26.6%. New listings, up 6.6%. Inventory of homes for sale, massive jump, up 72.1%, and month supply up 128.6%. 3.2 months. Still a seller's market. For how long, yet to be determined. I don't know, but I suspect if you're thinking about selling, the time to do it is yesterday. And if you're thinking about buying, bar the door, Sally, because we're going to score you a great deal. And we just did that for one of our clients. So we negotiated a $70,000 discount relative to original list price in Delray Beach, which takes us to Boynton Beach, the city in which I live, a market that I know like the back of my hand. Closed sales down 21%. Median sales price up 0.7%. Average sales price up 8.7%. Almost double-digit growth for average sales price in Boynton Beach. $616,600 is the average sales price in Boynton Beach. However, that's not the average sales price in my hyperlocal market of my zip code, which we are going to cover next. And this is going to shock you. Dollar volume down 14%. Percentage of original list price received down almost 8%, 92.5% to be exact. But the days of 100.4% are over in Boynton Beach unless you price your home the right way, in which case you'll definitely get 100% if you're working with the right professional. Time to contract up 142%. Pending sales down 4.6%. New listings down 6.2%. Inventory of homes for sale, massive jump up 118%, and month supply of inventory, which jumped from a month a year ago to just under 3 months, is 170% increase. So if you're thinking about buying in Boynton Beach, you've got more choices, you've got more leverage. But it looks like there's been an uptick in average sales price of 8.7% in February. What will March reveal? And that's what we're going to cover right now. And if you stuck around this long, I appreciate you watching, because this is the big payoff. This is what the market looks like today. And to be clear, this is my hyperlocal market. This is my zip code. This is 33473. This encompasses the Canyons Enclave. It also encompasses some luxury 55 plus active adult resort style communities. And some of them are older, and so it drags this number down a little bit. But you've got to know what this number is if you're thinking about shopping in this market. And what you can see as far as inventory is concerned is that there's been a almost 21% uptick in inventory that's for sale. There's been a 133% uptick in sold homes. So more homes are selling because more homes are for sale. And the pending sales have increased 46.2% too. But to be clear, in February, it is still a seller's market. And in February of 2023, sold prices are appreciating, or they were appreciating. We haven't talked about March yet, but what you can see is there's been a massive uptick in home value. The average sold price in February was up 21.6% compared to last month, and it's up 30.8% compared to last year. And the average for sale price uptick too, up 7.9% compared to last month, which is down 9% compared to last year. But keep in mind, we're talking about February. What will March reveal? Because in March, we've got a lot of fear in the market. We've got a lot of concern about systemic failure. We've got a lot of things happening in the economy and in the world that have people starting to bite their nails. But I argue we're at the start of that fear. We're at the start of that pain. We're in the first inning, and I suspect that's going to get a lot worse as we get towards the end of the year and into next. And to be clear, I'm not rooting for that, but that's what I suspect we're going to see. And I'm committed to telling you the truth so that you can make the best decisions for yourself, for your family, and for your financial bottom line. But now let's look and see what March has yielded so far. The average sold price in 33473 in my hyperlocal market is down 20%. 20%, a decrease of 20% in March. That trend is not your friend if you're thinking about selling, and it's certainly your friend if you're thinking about buying. But compared to the same month a year ago, it's up 4.2%. And relative to the current versus previous year to date, it's up 22.8%. Now, I hope you found this content valuable, and if you did, please subscribe to the channel. Give it a thumbs up, share it with a friend. If you've got any questions or concerns, either reach out directly or leave them in the comments below. And if you're thinking about buying or selling, please reach out directly because we would love to help. And check out my next video because I suspect you will love it a lot. And until next time,